Getting set. We are now live in 3, 2, 1. Hello, this is Mitch Goldberg, your host. You're watching Be the Boss of Your Money. This is your post market live show where we go over the day's news, the financial news, the business news. We want to put it all together, make sure that you know what's going on so that you can make the best decisions with your money. We talk about personal finance, financial planning, opinion, commentary, guests. We do it all here. The name of the show is Be the Boss of Your Money. And what I want you to do is ask me questions in the comments. I love hearing from you. It's the best part of what I do. So, welcome to your personal finance show. I'm your host, the personal finance coach, Mitch Goldberg. Yeah, okay. Seriously, I get all fired up for the show. You ever have a day when like everything goes pretty smooth and you just like feel so relieved of the things you got done and things are weighing on you and you finally got those out of the way? That's the kind of day I had today. So I'm having a really good day. I hope you are having a really good day as well. So let's get the show started. We'll roll the quick intro and then you're going to get your questions ready. While you're watching this, if you don't mind, give me a thumbs up, maybe a heart reaction, a care reaction, a celebrate reaction, depending on which platform you're watching me on. And I will be able to see who's out there. And, I'm going to do my best to bring you. Oh, I'm not just going to do my best. I'm bringing you the relevant information that you need to know. This is a continuation almost like off of yesterday, but don't worry. If you didn't watch it yesterday, we're just going to jump right in as if, you don't even need to have watched it yesterday. We'll catch you right up. Here we go. All right. Thank you for joining me. I see a few people out there. Thank you very much. I see the numbers coming in. So I appreciate you joining me. Give it a thumbs up if you don't mind. And if you're watching this on YouTube, and we haven't met yet, if you would be so kind, subscribe to my channel. I post all of these shows get posted on my channel, plus a lot more. And it's a great, let's say, repository or a depository. It's where I store all of my videos. It's where I put all of my snippets. You see, after I do the live stream, the next day we come out with, 30-second to 2-minute highlight reel of the important points where we boil the whole show down to a minute or two and give you some really valuable information that will tell you things that you might not have known, things like IRAs, Roth IRAs, crypto, and lots of things like that. And today, speaking of crypto, today is a big day for crypto. So what I'm going to do is take us to screen 4, which you're seeing now. That's how the market did today. And I want to go over with you the day's action because this is significant. All right. Last Thursday, we had a rally of over 500 points in the Dow, but all the major averages moved up. Friday, the rally was followed by another rally. So just 2 days, almost 900 points in the Dow, big rally at all the major averages. Monday, the Dow was off a little bit, about 35 points, which is nothing. I mean, after a 900-point gain, 35 points is, nothing. And then, but the other averages went up. And then things continued to go up yesterday, and even more so today. And yesterday, I'll just put up the thumbnail to give you an idea of what we spoke about. Yesterday was what could drive the year-end rally. And the points made were earnings. Investors have become totally comfortable with the thought of the taper, the Fed tapering its bond purchases. So these are really the big things that investors are getting comfortable with. Employment is starting to improve. I know the non-farm payroll figures for last month were weak, but the first-time claims have been trending lower. So there is improvement in the job market, and previous disappointing months have been getting revised higher. Plus, we're seeing a pretty dramatic drop in the number of new COVID infections. The thing to worry about with COVID now is what's happening in England. There, it looks like the Delta variant has mutated enough to even become its own new variant, and that's a pretty scary thing. About 6% of all cases in England are this new uh, kind of Delta. We don't know if it's just if it's just a worse Delta or a whole new variant, but it's growing pretty rapidly. So we'll see what happens there. And they're kind of they're going into the winter a little bit before us. They did get their population inoculated ahead of the United States, which could be why they're seeing a surge in infections. And what I'm speaking to is that the efficacy of the vaccines start to decline after about 6 months. So maybe that's what it is. We'll see. Okay, so what else is driving markets higher? Some mechanics, window dressing. Fund managers, hedge fund managers. If you're managing money, I mean, this is not something I do, but it's very common. And you aren't in this year's winners like an Nvidia or a Microsoft or a Tesla. If you weren't in those, and you've got to make your numbers, you've got to make your gains for the year, you're going to buy what's already working because you expect everybody else will jump onto this, so you'll make money that way. And you want to show people that you had these stocks on the books, even if you didn't have them for the last 10 months. You buy them now, at least you could show at the end of the year that you were in these stocks, so nobody could say, why weren't you in these stocks? And that is basically what window dressing really is. And I think that's a very big mechanical thing. It also puts weight on the losing stocks for the year. So stocks that are down on the year, nobody wants to show that they had those stocks. So maybe they'll, fund managers will bail out of those, or they'll use the losers to take tax losses. So this is why I don't expect down stocks. If you have a poorly performing stock this year, I highly doubt in general that it'll become a winner anytime soon. You'll have to wait till next year. And I highly doubt that the big winners this year in general, I'm not naming specific names in this regard, but the big winners this year will most likely remain big winners and become even bigger winners because of the way the market mechanics work and the window dressing and what portfolio managers do to try to make their number for the year. You might not like that, but for these reasons, I expect a strong rally into the end of the year. In my opinion, it could change, but I'll tell you what. Whatever I think is not really relevant. It's what other investors think is what's relevant. What we think on the aggregate collectively, and stocks are going higher. I think the year-end rally started. I think the year-end rally started a little bit earlier than normal. It usually starts a little bit later, maybe toward Thanksgiving, which is just 4 weeks away. Oh my goodness. Did I just say Thanksgiving is like 4 weeks away from tomorrow? It's like the clock is running out on this year so freaking fast. It makes my head spin. I don't know if I should be happy or depressed that the time is just going by so quickly. I feel like I'm still used to 2020 and we're almost at the end of 2021. Do you feel that way? All right. So year-end rally. Let's I hate when I drop my notes. Let's continue on, talk about this year. I know I got out of screen for a second. We've been talking about a lot about the Bitcoin BITO. That's the Bitcoin ETF, the Bitcoin strategy ETF from ProShares. It doesn't really invest in Bitcoin. It invests in futures that track short-term futures that could track the price of Bitcoin. There's a difference. Okay, we'll take a look at that in a moment. How it did today. What else do we need to talk about? All right, oil. Oil is going up. Oil has been a huge winner this year. Oil is up 75% this year, right? Per barrel of oil. That is just a lot. and you're seeing it at the pump. And at some point, we get into the where, if you're paying more, $30 to $40 to $50, now you're paying $65, $70 to fill up your gas tank. Well, either that eats into your discretionary savings, right? Discretionary spending. And maybe you'll save a little bit less money, or maybe you'll just spend less money elsewhere. So maybe a few less trips to Target and Walmart. Maybe you won't quite fill up your basket as high when you go to a store. Maybe you won't go out to dinner as much because you're seeing the price of food go up so much. And that's what inflation does. It's demand destruction, whereas you have to buy fewer things. So if oil goes up much more, we have to start getting into the thinking that, you know, oil shocks have caused recessions in the past. Now, the economy is opening, it's strong, COVID cases are down, people are getting back to vacationing, events, football games, and all that great stuff. We'll have to see what happens. Electric cars are soaring. Tesla just came out with the numbers. We're going to review that momentarily and take a look at what's doing after the bell from Tesla, IBM, PayPal, and Pinterest. PayPal, we'll say it's rumored to be that PayPal is going to buy Pinterest. I'm not really sure how a payments digital financial company, how that mixes with Pinterest, but I'm sure they'll put it together, and maybe just they want to be in social media and gather all that data and information and become another Facebook. Well, I don't know. We'll see. I could see Amazon buying Pinterest, because of retail sales. But okay, whatever. I'm getting off track here. All right. So then we talk about inflation a lot, and we're going to take a look at how the market did. So inflation, it's here. We've been using the word transient. Then I've been going to, transient, like define that a couple of months, a year or two. And there is evidence that parts of inflation are going down. Some things are going down in price. And once it's the supply shocks that we're having, once they start to cure themselves, the market will cure themselves. Okay. You can't just give an executive order or wave a magic wand and say supply shocks go away. Once they start to dissipate, prices will start to come down. There's not a problem with natural resources or, how do I say this? Before the pandemic, inflation was persistently low, too low for comfort for central banks. So central banks like the Federal Reserve, okay, like the European Central Bank, the Bank of Japan, Bank of England, have been trying to prop up inflation because inflation needs to be, you need some inflation for a healthy economy. And it was just too low and they couldn't get it going. And now finally inflation is going up. What happened? The pandemic caused factories to shut down. And a lot of factories around the world keep getting shut down. There's also a power shortage in Europe and in China. China doesn't have enough coal. Europe doesn't have enough natural gas. Right now, the United States is like one area where we have enough natural gas. Our problem is we don't have enough imports because there's problems with manufacturing in China, with semiconductors, with clothing, with toys, all that stuff. So China has shuts down factories for lack of power, lack of commodities like aluminum, coal, things like that. And what happened is that China shut down because of the pandemic. Demand came back quicker than they expected. So they gear up production again. They go through their stocks of coal. They go through coal too quickly because they didn't order enough coal because they didn't think they needed as much coal as it turns out they really did need. And that has created shortages of Chinese-made products, which is like, if you're in the United States, everything you buy is made in China. So that's why this Christmas season is going to be like, expected shortages of everything. So, but if you raise interest rates or stop stimulating the economy, which I think is a must, I think the Federal Reserve has worn out its welcome. That doesn't really cure supply shortages, but those will get done. There's a shortage of containers that go on container ships. There's a shortage of labor because you can't get a lot of people back to work. Some parts of the world, like India and China, there's a little bit of COVID. They shut down entire ports, entire factories, and send everybody home. We'll get through this. I don't know when, but it's taking longer than people thought, and it's really hard to envision a snapback in semiconductor uh, production anytime soon. That's one of the things that takes a long time to catch up on is semiconductor production. That's such a high-end manufactured product. All right, so we're going to talk about Bitcoin in a moment. So there you go. So let's just go back to screen 4. Okay, so the Dow continues to rise. NASDAQ was off 7 points. No great shakes. Listen, it was up. It's been up a lot. So the fact that it's off 7 points is no big deal. S&P was up a little bit, up 15 points. Gold actually, I have to say, it seems like it either goes up or stays flat. It doesn't seem like it's been going down lately. And Paul Tudor Jones, the famed investment manager, hedge fund manager, came out today and said inflation is a lot worse than we think. It's a lot more persistent than we think. The Fed is way behind the 8 ball, and inflation is going to be really bad. So he spoke up very bullishly about crypto. He was bullish on gold, but he didn't say he thinks crypto is a better hedge against inflation than gold. But I think because of what he said, it spooked people into buying gold. I am a I condone, let's say, I'll condone gold for the right reason. All right. Gold is a commodity. It doesn't produce a dividend. If you actually have physical gold, it costs you money to either store it or insure it, all those things. We could talk about that another time. Let's take oil continues to go up $1.29. Oil has been so strong. The 10-year yield at 10.6, well, God forbid, right? 1.65%. So the 10-year treasury continues to move up, and that is going to put a little weight on the higher flying, high PE, high sales to price kind of stocks. And let's just take a look at the small cap. The Russ 2K was up 0.61%. Okay, so that's I would say overall that's a positive. Remember what I say, when you see small caps, meme stocks, and Bitcoin go up, and I've been saying this for months. Okay, and I just want to say that because a lot of people are saying it now, but I've been saying it before them. When you see those 3 areas go up, that means the stock market has a lot of energy. And while you're watching this, I see we got a couple of thumbs up. Thank you, Jay, Jerry, Ray. I didn't know you watched my show, Ray. Great to see you, Ray. Thank you very much for joining us. Really appreciate that. Nancy is out there. Nancy, I have a little story for you. You might, I don't want to, bore you with a little story, but Nancy is the first girl, besides, let's say, my mom or grandmothers, who I said I love you to. And you're like, what the heck, really? Yes, because when we were in 3rd grade, we raised chickens. We had an incubator with eggs and we only had 2 hatchlings. And Nancy was in charge of picking the names out of the hat of who gets the chicken. And I thought I would give anything to win the chicken, to bring the baby chicken home. It would be like a dream come true. It would be like the best thing. I love animals. It would be so great. And Nancy plucked my name out of the bucket. And I was so excited. I was 8 years old. I love you. Thank you. All full of enthusiasm. So just a little story of my life that I want to share with you. I know, a little corny. That's me, though. I'm corny. Okay. Let's go back to the screens. That's not the screen. Hey, I'm in 2 screens at once. This screen. Okay. The S&P 500 is ever so close to reaching a new record. The Dow Jones, by the way, the Dow Jones Industrial Average did reach a new intraday all-time high. It didn't quite close there. It's like maybe 30 points away, and the S&P is just maybe 10 points, 5 points away from an all-time high. So we are back to all-time highs. Okay, let's take a look at crypto. Bitcoin continues its surge, a little bit over 66,000. A second ago it was 65,000, but high 65,000s. But just Bitcoin trades 24/7. It's not like the stock market where it closes at 4 o'clock and that's the price for the day. It's always trading up over 3%. Now, I have to tell you, it's a massively large asset now. As an asset class, some people won't call it an asset class. They still are not believers. By the way, if you're having trouble believing in a particular asset class, just realize one thing. So if you're someone who's having trouble believing in an asset class like crypto, and you may or may not be one of those people, I'm not knocking you either way. We have our own opinions. We live with them. That's what puts the personal into personal finance. But just remember this. It doesn't really matter what you think. What matters is what your fellow investors think. And your fellow investors have already made up their minds that crypto is something they want. And now that it's moving, you're starting to see other institutions say, you know what? Other hedge funds, money managers are saying, maybe we need to own some of this crypto too. And the FOMO is out of control. FOMO, fear of missing out. The FOMO is so intense, and it's just, it's so bullish for crypto. And, we've got that futures ETF that's out. I'm not overly enthusiastic about it. I think if you want to own Bitcoin, then buy the freaking Bitcoin. I know a lot of people don't want to be hassled or bothered with opening up a wallet, and it's a pain in the neck. And some people might not feel technologically savvy to do that. So there is the Bitcoin futures ETF. You could give that a shot. But I think the Bitcoin futures ETF is really designed for short-term trading and hedging as opposed to a long-term investment. All right. But Bitcoin continues to go up. Ethereum up 7.5%. Wow, look at that. Litecoin up 10%. I mean, these are gargantuan. How did that Doge do? Doge still like mid-20s, 26 cents, was up a penny. So that's that. Let's just take a look, if we can, at the ETF. Closed up $1.34 today. The red is just aftermarket trading, but up $1.34. So not quite tracking the rise, but it's if Bitcoin goes up, then yeah, the ETF will rise with it. Could even go up more because it's futures, which are a form of leverage. But we talked about this a lot. Okay, so now let's take a look at Tesla. Tesla posts record revenue and earnings. Okay, they're selling so many cars. By the way, the reason why, I'll just leave Elon's face up here because it's anytime you talk about anything in finance, you put up Elon Musk's face. It's like, wow, so much more interesting. But Tesla is able to grow sales, grow units, number of units sold, deliveries, as they say in the car business, because they're just not running into the semiconductor shortage problem that the rest of the industry is having. I'm not really sure how he does it, but they're doing it. And their earnings are better, $1.86 versus $1.59, 13.76 billion of revenue versus 13.63 on the revenue side. So let's take a look at aftermarket trading. Okay, put myself up in the corner again. Okay, Tesla, it's off $4. Look, the stock has been up a lot recently. So the fact that it's up a little bit, it's off 0.5% in aftermarket trading, I don't really think that's indicative of anything. Do you know who Kathy Wood is? All right, here, news just comes out. FDA clears Johnson & Johnson and Moderna booster shots for millions of people. So go get them while they're hot. Johnson & Johnson and Moderna booster shots for millions of people. If I got the Johnson & Johnson vaccine for COVID, that I would be really excited about this, because from everything I see and everyone I talk to, anyone I talk to got the Johnson & Johnson shot, they all feel like losers. What do you get? You get the Moderna, you get the Pfizer? Yeah. I got the Johnson & Johnson. Oh, you loser. You got the Johnson & Johnson. Where did you go to the Jacob Javits Center at like 2 in the morning for that? Oh, that's pathetic. Anyway, I'm glad you're getting a booster shot. That's good for you. All right, so let's just take a quick comment out there. Who is there? Nancy, LLOL. Can you believe that story that I remember? Do you remember that? Do you remember that story? That was just such a great childhood memory, you know? All right, so let's get back to that screen and let's take a look now. IBM. I was like really considering adding IBM to the portfolio that I manage, my overall client portfolios. I was so deeply considering that, and I figured, you know what, and just take this lesson from me, okay? Because I've made this mistake before, okay? In the past, I just want to check the time. I have a timer over here. Whenever I am thinking about adding a new stock, it's one thing if they came out with earnings like, within a few weeks or a month. But if you're thinking about adding a new stock to your portfolio and you realize that their earnings and revenues, their quarterly results are going to be reported in like a week or a couple of days, always wait. I would rather pay up $6 for a stock that I looked at because it tells me that things are in good shape, better shape than we thought. I feel more comfortable with that than buying a stock, obviously, that drops $6 like the day after I bought it. Okay. I'm not talking about a stock that's like $3,000 a share, like Amazon. $6 and that is nothing. But when you're talking 4.5% drop, IBM is down 4.5%, down $6. Okay. You take a look at that. That's a crappy feeling. It sucks. So take it from me. I in my younger days, I wasn't as patient as I am now. That's what happens with experience, but you live and you learn. Okay. And Nancy says, but I don't remember a lot of things anymore. Okay. Okay, here. No. I don't remember a lot of things anymore. That's okay. You and me and the rest, the rest of us, right? Why should you be any different than the rest of us? So anyway, let's just take a quick look at two other big stories. Okay. PayPal is up in aftermarket trading, but I don't know if you could see that, but it was down almost 5% today on the day. PayPal down over $13 a share. Supposedly, they may buy Pinterest, which was up $7, up 12% in the regular session. We'll see. I don't know if this deal really makes sense for PayPal, but then again, like I said before, it's not my decision of who's going to buy or it's not my decision if it makes sense or not. If PayPal buys them, great. And I think that's the last thing I'm going to close this on, okay? The Milken Institute, financial gathering is taking place right now in Beverly Hills, California. And the top people from, the top Wall Street firms are so optimistic on M&A activity coming up that I think you're going to see so much M&A activity. So many companies want to merge to maintain their high profit margins. It's another reason I think to be bulled up. Notwithstanding, we're going to have down days between now and the end of the year. But right now, investors, your fellow investors, are screaming bulled up. Thank you very much for watching. I really appreciate you all. And I'll be back tomorrow. And I had a lot of fun today. Today was a really good show. And if you're not connected to me in some form of social media, I'm on Instagram at InstaMitchG, LinkedIn, Mitchell Goldberg, Facebook, Mitchell Goldberg, Client First Strategy on Facebook, and of course, YouTube. Client First Strategy is my channel. If you are the type of person who subscribes to YouTube channels, please subscribe to mine. I'd really appreciate that. And I'll see you tomorrow. Take care.